Hey guys, so in this video we are going to go over zones and liquidity. So basically what liquidity means is it's the ability to enter buy or sells without causing a huge movement in price. So what that means is usually it happens after an impulse move. So right now we can see that we're on CAD JPY on the 4-hour time frame. We had a huge impulse move to the downside, and of course when we are at support we need to have a correction in the market. So what that means is this is liquidity right here. So we look at a single zone with a lot of buyers and sellers with pending orders. So this is where the market has a lot of buyers and sellers and tries to reverse the market. So in this zone, we can see that we have a level of support. So you can call it whatever you want. You can call it supply and demand. So you can call this demand, you can call this support, you can call it liquidity. It all means the same thing. So just dragging this to here, we can see that we do have a low. So right here we have a low, and then as well as right here. So what ends up happening is the market makers basically have pending sell and buy orders around the zone, and they know that retail traders are going to hop in and get this buy. But what ends up happening is they trick you. So some of the traders will think, oh, okay, it's breaking, I'm going to take a sell. And then some of the traders will see, okay, it's at this low and it's going to reverse, I am going to enter. So what ends up happening is you want to get that precise entry, because if you entered at the 81,800, because this is the first level at the 81,800, okay? So what ends up happening is we have another level at around 81,650. So how to get this precise entry is we want to drop down on the lower time frame, so the 30-minute, for example, and we can see this a lot clearer. So what ends up happening is it breaks the 81,800, then kind of ranges, comes back down and tests this low and fills this order right here. Okay, so fills this low, fills this order, and then ends up spiking up and closing above the 81.8. So to get that precise entry, we can go on the 30-minute time frame, take the long position tool, and go anywhere in this zone. So 81,650 would be a good entry. So a double bottom there. And then this way we can have a stop loss right below this structure. So like an 8-pip stop loss. When I talk about having a wider stop loss, I'm looking on the 4-hour time frame. Okay, so when we are, like, let's say we entered at the 81,800. If we entered at this first low, yeah, you'd want to have a wider stop loss. So in this case, let's say we entered at that 81,800. So in this case, so I always say 30 to 40 pip stop loss. So that makes sense in this situation, right? So that's why I say always have a 30 to 40 pip stop loss, because if you entered at that 81,800 and you entered, let's say, on the 1-hour, that's still fine, but you gotta have a wider stop loss. Okay, but then if you jump down on the 30-minute, you can get that precise entry and you can catch that whole move. So let's say we enter, like I said, at the 81,650. Stop loss, I mean, it could be 8 pips, so let's just go for 20. I mean, again, you can have it right below that zone, but let's just say 20 pips, okay? Okay, so what ends up happening is we're looking at the 4-hour, we got this entry, and we can see that it's starting to reverse off that liquidity. So what ends up happening is, okay, we just look left. So we have an area right here where this was once support, broke, tested, went down, okay? So now this is resistance. Okay, so our first target from this 81,650 would be this resistance zone. Okay, so around 83. Okay, so let's just see what happens. Okay, so this is where some of you would freak out and think it's about to reverse all the way back down. Okay, but what it's actually doing is it's testing this structure in here. So this is minor support. Okay, so what ends up happening, let's see. So test structure, comes down, tests it once more, and then reverses. Okay, so a lot of you would, not you specifically, just people in the market trading, especially new beginners, would think, oh no, like the market's about to reverse, I should get out, and then they end up having, like let's say they get out here, they end up only having a 1 to 3, almost a 1 to 2, right? Rather than having a 1 to 6, almost 1 to 7, risking 20 pips to make 134. So you got to keep your emotions out of it. So when I talk about major zones, it's basically where the market makers, so when I talk market makers, I'm saying like big traders, institutions, hedge funds, all that kind of stuff, are placing buys and sells, and basically they're just willing to risk the most amount of money at that zone. So that's why we want to take an entry off that, because it gives us a big risk to reward. So lots and lots and lots of pips. So that's why I kind of stress about mastering, like I tell you guys to master a couple pairs, I tell you to master 1 to 3. The reason for that is because if you're watching these pairs over and over and over again and you're executing them off the levels and you have these levels memorized because you've gone over it and repeated it, then it will be easy for you. Honestly, it will be really simple and you're just repeating the same cycle over and over again. So the most important thing about mastering 2 to 3 pairs is it's important to understand that when the move happens and what time and day it happens. So in the course, I will go over more of time sessions and days and stuff like that. But that's why it's really important to master a couple pairs and not look at 1,000 pairs, or else you're all over the map. Okay, so let's say we have 81,650 as our entry, like I said, and we're at our first target. Okay, so you don't have to get out of the trade. You can take partial trades, like whatever your trading plan, whatever works for you best, do that. If your plan is I want to make 100 pips a week, then this is 134 pips a week, get out and your trade and your week is done, okay? But it all just depends on what is consistent for you. So basically we hit our first target. So what's our next target? Well, we have a major zone up here, okay? So what we want to do is take this and I'm just going to change the color, persistent color. Okay, so that's our next target. In between here, we have minor support or minor resistance here, but it should end up going to that 84.5 target. Let's just see, I don't know. Okay, so what happens here is this is our first target. So it respects, and then it comes down here to this level, and here. Okay, so many of you would think, oh, okay, the market's reversing, it's going to come back down. Well, you have to watch structure, okay? So it makes a double top. So technically we could take profit here because it's not respecting the 83. So it double topped and we can see that it's about to create an M pattern. So double top. Now the question is let's say you do end up taking a sell in the middle of structure here. We have to make sure that price is going to break. Like we have to calculate our risk reward here. So we have to see, okay, is it going to go here? Is it going to go here? Or is it going to go down to the low? Because technically we're in a correction. We're in an uptrend, right? So you don't want to go against the trend. So just by measuring this, let's measure it to here. That's 41 pips, okay? So we're aiming for the longer term pips, longer term targets. Okay, so that's 42 pips, not enough. Here, 80, that's pretty good. So let's just see. So let's say you enter a sell here. Okay, so you're still in the buy. Let's say you take profit and enter a sell here. Okay, so we enter at 83. Or sorry, right on top here. 83 100. Stop loss above. And then our first target's here. Okay, so let's see. Okay, so then it starts to reverse. Okay, so I mean, by all means, take the 43 pips, but don't you think that this trade is better because you're all the way down here and not trying to go against the trend? So you're in a buy here, and then you see a double top and you take a sell. If it broke structure here and went down, by all means, this is good, because what could happen is we can draw a trend line and we can say, oh, okay, price may come down to structure and then continue up. But in this case, it goes on this minor support and reverses. So chances are either you take that target at the 43 pips, or you end up breaking even, because again, we're in this massive uptrend. Okay, so let's just see what happens. Okay, so then it starts to break. And a lot of people, like I said, will hold on to this trade thinking, oh, okay, it's just reversing again and it's going to go down. But again, looking at bigger structure, we can see that this is still an uptrend. Okay, so that's what I'm saying. Like when you have an entry from a major zone and you're just holding it, I know it's hard to hold it at first because you're developing your emotions. It's a lot of work. It's really hard. But once you practice that over and over again and leave your emotions out of it and just realize, okay, I have an entry from this zone and I can hold it. What ends up happening is you're just following structure. So it ends up breaking, test this. This is another entry, to be honest. We can take another entry off this zone. So this is entry number 1, this is entry number 2. Our target, same area. Our target from here, same area. Okay, so let's just see. Okay, so it hits that, ranges, and then it's about to drop. Okay, so this is liquidity here. We had a huge impulse, range, buys and sells here, and then sellers take control. So just from this is 1 to 14, so we're risking 20 pips to make 281, so almost 300. And then this is a 1 to 22 ratio, risking 8 to 10 pips to make 180. See how simple that is, guys? You're just following structure. So that's almost 400 pips. So then what ends up happening, this is major structure. We can see it broke through this structure and this structure. So we want to take profit at this level because we can see that it's not breaking above. So then what do? We look for sells because we got our uptrend, we got a huge impulse. We need that correction down back to this level. Okay, so this now becomes support. Short. So let's say we enter at the 84,500, and then with our stop loss above, again 30 pips stop loss, and then our target is this first structure. Okay, so which would be at 83. Always run your numbers. Okay, so let's just see what happens. Okay, so it hits 83. And then it goes past this minor resistance, or this minor support, and then we just extend that out. Wow. It's crazy. Okay, so it's coming back to that major low. Whoa, this was an insane move. Holy. Okay, so this was easy. This was our short from 84.5. Again, we're just following price. It keeps tanking, tanks this structure. We move our target, keeps going. We move our target, keeps going. We move our target. It's a really good trade. And then again, we just look left to see what's happening here. Okay, so let's look at the daily. Okay, so it completely blew through this low. So then what ends up happening is we have a low in here. Back to 4 hour. See how precise that is? Completely touches it and then reverses. So just from that, we can drag our target since it came all the way down. That's our target. So the next low, and then it ends up reversing. Again, we can see on the 30-minute that it ended up reversing. It was at around 80 even. So just from that top entry, that's a 1 to 14 risk to reward, 30 pips to make 100 or to make 440. So just on one pair, that's I think that's close to 800. Let me calculate that quick. So we have like 286, 182, something like that, and then 440. That's 900 pips just on one pair, just following market structure. That's how easy it is. So, like I said, basically liquidity happens from an imbalance of supply and demand. So just to make it simple, it's where money is sitting in the market. So liquidity, like I said, happens on a correction of a trade. So make sure you guys understand this. If you don't, please contact me. I want to make sure you're understanding this because this is the easiest way to trade. You don't need indicators. You don't need fibs. I talk about fibs in my course because a lot of people know about them, so I need to make sure they know how to use them right. But if fibs don't work for you, this works so easy, just going off pure price action structure. Okay? So for your homework, again, if you don't have the Pro Plus or Pro Plan, that's fine. You can just do these homework submissions on your own. And if you have any questions, obviously I'm here. Make sure you are sending them to me on Slack. Mark up 2 charts, explain liquidity, pick entries and targets. Identify your risk reward. Okay.